Hey everyone, focused learners, welcome to the Explainer. If you're gearing up to open an education center, maybe a language school or a vocational training facility in Vietnam, well, you've definitely found your ultimate roadmap. Today, we're unpacking the ins and outs of Vietnam's education tax laws. We're going to take what looks like super dense legal jargon and turn it into a crystal clear, legally optimized strategy for your business. By the end of this Explainer, you're going to know exactly how to structure your whole operation so you can maximize your incentives and successfully launch your center. But right off the bat, let me ask you something. Is all education tax-free in Vietnam? You know, it's a super common assumption. A lot of entrepreneurs just dive headfirst into this sector thinking, hey, I'm never going to have to pay a single dong in taxes just because I'm teaching. Well, I'm here to tell you that while the general rule is incredibly favorable for sure, there are some very surprising legal exceptions that can catch you completely off guard. If you don't know the exact rules, you could be leaving massive amounts of money on the table, or worse, facing some really unexpected tax liabilities down the road. All right, let's just lay out our step-by-step business journey for today. First, the education tax advantage. Second, strict conditions for exemption. Third, the VAT exceptions. Fourth, corporate income tax benefits. And fifth, broader tax-free categories. I promise, this complex legal code is actually incredibly logical once we break it down. Okay, kicking things off with our first major milestone. Section 1, the education tax advantage. This right here is the absolute bedrock of why opening an education business in Vietnam is just so financially attractive. So what does VAT exempt actually mean in this context? At its core, it means education and vocational training are not subject to output value added tax. Simply put, you do not have to pass an extra 8 or 10% tax cost onto the families who are paying for your classes. And here's why this is such a game changer. During certain economic periods, the government might temporarily drop VAT for standard commercial businesses down to 8%. But education, it's consistently VAT exempt. It's a permanent fixture of the tax code. This consistent exemption gives educational startups a massive pricing advantage over your typical commercial business. You can either pass that savings on and offer more competitive pricing to your students, or, keep your prices standard and just enjoy a much healthier profit margin. That being said, it's not exactly a free-for-all. Let's move into Section 2, strict conditions for exemption. The government absolutely requires strict legal and quality compliance if you want to actually earn these tax breaks. Yeah, you literally cannot just rent a room, slap a sign on the door, and call yourself a tax-exempt school. First up, you have to meet strict teacher standards. According to regulations like the upcoming Circular 43 of 2026 from the Ministry of Education and Training, your teachers need the proper pedagogical certificates and actual practical capabilities. Step 2 is vocational registration. Organizations have to be officially certified to enroll students by authorities like the Department of Labor, Invalids, and Social Affairs. And Step 3, facility approvals. That means your physical space, your equipment, and even your fire safety protocols all have to be legally vetted. But hey, what if you're just starting out really small? Take a look at this number, 500 million VND. If you're operating as a local household business, or maybe just an individual tutor, and your revenue is 500 million Vietnamese dong or less per year, your educational income is completely tax-free. Seriously, no income tax at all. It's a brilliant incentive for small-scale tutors to really get their businesses off the ground. So what happens when you crush it and actually cross that 500 million threshold? Well, at that point, both household operations and unstructured centers face a flat 2% tax rate on their revenue. Whether it's calculated as personal income tax for a household or corporate tax for a business that just lacks proper separate accounting, the government applies a flat 2% to your educational revenue. Now, 2% is low for sure, but as you scale, you are really going to want to structure yourself better, which we'll get into in just a second. All right, moving on to Section 3, the VAT exceptions. This is crucial. It's kind of our myth-busting section. Remember earlier when I asked if all education was tax-free? Here's where we have to warn you about the specific activities that will surprisingly trigger VAT liabilities. It's a really clear divide when you look at it. On one side, we have the safe, completely VAT-exempt stuff, regular academic classes and certified vocational training. But on the other side, look at what is subject to VAT. If you build an educational app that relies entirely on self-study without a live teacher, taxable. If you just offer standalone testing and certification, but you aren't doing the actual training process, taxable. And get this, if you open a center purely for sports, swimming, or yoga, and it's not a certified vocational program, you're actually subject to a 5% VAT rate.
And it goes even further than that. There's a super common trap here for founders of language centers, and it's the side hustle. Say you open an English center, totally VAT exempt, but then you decide to sell textbooks or learning equipment, or maybe offer some specialized short-term educational consulting. Those specific activities do not fall under the general education exemption. They trigger standard VAT rules, and that's often at the full 10% rate. The taxman honestly doesn't care if it's an English textbook. A retail sale is a retail sale. So you have to be incredibly careful to separate these revenue streams in your accounting. Which brings us perfectly to arguably the most exciting part of this whole explainer, Section 4, Corporate Income Tax Benefits. If you structure your center not just as a household business, but as a proper enterprise, you unlock some absolutely massive wealth-building incentives.
10%. I really want that number to just sink in for a second. Properly structured education businesses, we're talking kindergartens, universities, vocational schools, they enjoy a lifetime preferential corporate income tax rate of just 10%. To put that into perspective, standard businesses pay much, much higher standard corporate rates. The government basically wants you to succeed and keep your money. But, of course, there is a catch. How do you actually secure that amazing 10% rate? Well, it's basically a direct reward from the government for professional transparency. To qualify, you have to use proper accounting regimes. You must issue proper invoices. And most importantly, like we just talked about with the textbook sales, you absolutely must strictly and clearly separate your educational income from any other business streams. If you mix your book sales with your tuition fees, you completely risk losing that golden 10% rate. Hold on, because it actually gets better. As an education enterprise, your first 4 years of operation can be 100% tax-free. It's literally a complete tax holiday. Then, for years 5 through 13, you get a 50% reduction on that already low 10% rate, which means you are effectively paying just 5% corporate income tax for almost a decade. It's only from year 14 onward that you pay the full 10% preferential rate. This timeline is incredible because it allows an education startup to scale aggressively and reinvest almost everything back into the business during its first crucial decade. And speaking of reinvesting, the law is super clear here. It states profits retained to reinvest in facilities and education in Vietnam are exempt from corporate income tax. This right here is the core philosophy of the Taxation Guide. The government is directly financially incentivizing you to build better schools, buy better desks, and upgrade your tech. If you don't take the profit out for yourself, but you put it right back into the Vietnamese education system, they will not tax that money. Plus, for whatever income is still taxable, you can legally shrink your taxable footprint through deductible expenses. A Smart Center owner is going to meticulously track all their actual expenses, things like teacher salaries, the direct costs of textbooks, the depreciation of your teaching assets, and management costs. By keeping really clean books, you ensure that you're only ever taxed on your true net profit. All right, finally, let's zoom out a bit for Section 5, broader tax-free categories. I want to give you the big picture of how the tax code actually views the work you're doing, because education isn't just some isolated anomaly. You see, education actually sits among 26 groups of protected, VAT-exempt industries in Vietnam. The nation strategically protects essential public and social services. So you're actually in the exact same protected tax class as unprocessed agriculture and food, essential healthcare and services for the elderly, core finance and life insurance, national defense imports, and even public bus transport and state-funded media. By entering the education sector, you are providing a service that the government deems absolutely essential to the social fabric of the country. Which leaves us with one really big question to wrap up. How are you going to structure your education business to maximize all these incentives? Are you going to start as a household business just to test the waters under that $500 million threshold? Or are you going to build a fully compliant enterprise from day one so you can capture that 4-year tax holiday and the 10% lifetime rate? Well, you now have the roadmap. The laws are absolutely there to support you as long as you respect the conditions, separate your revenue streams, and maintain pristine accounting. Thanks so much for joining me on this explainer, and good luck building your legally optimized dream center.